Hello traders, it is Wednesday, May 29th. That means it's time for my weekly video. Before I get started, I'd like to mention that we're going to be reviewing Option Stalker. That's going to be the sources of all of our trade ideas. It includes real-time data, so you don't need to have any special brokerage accounts. You just need to sign up. It's $399 per quarter. Everything you see tonight is included in Option Stalker. It's so easy to use. If you're a swing trader, and that's the focus of tonight's presentation, it shouldn't take you more than 5 or 10 minutes per night to find these trades. You just have to run some searches and look for some basic patterns. You can sign up or take the 1-week trial at www.oneoption.com. Please spell it all out. And if you're watching this video on YouTube, you're seeing it a week after the fact, please pay attention to how the performance has been. You get to see how the picks have actually played out after the fact. So go in, take a look at charts. You'll have the stocks that we've highlighted, see how they did. I think you'll be really impressed. We make money week in and week out because we have a systematic approach and an edge that we use. So again, if you like the video, please give it a thumbs up. Let's get started. This is the S&P 500, the SPY depository receipt, and you can see how we've had some negative price action here with a downtrend. I'm going to add a couple of moving averages, the 200-day and the 100-day, very easy, toggle on, toggle off. There's your 100-day moving average, and you can see how the SPY closed just below it and just above the 200-day moving average, which it did test today. So it bounced. We have a little hammer here, and we could move a little bit higher this week, but I am expecting the market to stay below this 100-day moving average. So our shorts are going to be contingent upon the SPY staying below 280. Really want to be below this level here. And we could see a little bit of a bounce, but as long as we're below this level, I think we're going to be fine. Nice, big, strong uptrend. We have a shorter term reversal and a little bit of a bounce here. Now, if you draw a line across the bottom here, that's a bearish flag formation, and you can see the breakdown here. I think we have more downside to go. Well, how much downside? I'm going to click and use an expanded Fibonacci just to give us an idea. And we're going to take the very top and we're going to line it up with that 280 level, and that will give us a target. Puts us somewhere around the 271 level, which actually coincides pretty closely with this horizontal support. Was a high, pulled back, breakout, pulled back exactly to that breakout level. So that's a horizontal support level, and that puts us right at about 273. So somewhere in that 271 to 273 level, we should start finding support. That at least gives us an idea of what to expect. I'm going to remove that drawing just so that it gets out of our way. Right click, remove, and we are going to focus on bearish picks today. But before I do that, I want to go and take a look at last week's picks. So I'm going to click the drop down menu. We created a list. We labeled it May 21st. And everything that we did last week, this is where the recording took place on Tuesday. It was a day early because we had the holiday coming up. I wanted to give members an ample opportunity to get in some trades. You can see 285 right here in the right axis. Everything that I mentioned last week was contingent upon the SPY being above 285. If it was above 285, we would be focusing on the bullish trades that I highlighted last week. If it was below 285, we would focus on the bearish picks that I highlighted last week. So we had AXP was a bullish pick. We would not have done it. You can see how the stock gapped down the next day because the market gapped down. I'm going to put another tool up. This is one of our indicators, 1OSI. Click OK. When the orange line is above 0, it shows strength relative to the market. I can also click on SPY, and you can see this is what the market's done. Boom, sell-off. Here's what the stock's done. Pretty much treading water, hence relative strength. So even though we didn't take a position, AXP held up pretty well. Alibaba. There again, you can see market down, stock really tanking. I'm going to take this SPY overlay off for the moment. And here you can see that this is our first opportunity to get short the stock was in here around this 159 level. And it dropped down to below 150 today. So that was a $9 move, a really nice trade. If you'd have taken this pick, you'd have made more than enough to cover a year's subscription, even if you did a few contracts, only a few put contracts. You would have done really, really well. We had BX was a long of ours. I love this breakout, and I'd mentioned I want to buy somewhere in the middle of this bar the next day, which it never got to the next day, but it did the following day because the market started to soften. But hey, we're below 285 on the SPY, so we're not taking long positions. I do still like this stock. If the market finds support, I'd like to see the stock hold this line right here and not fill in the gap. It could even come down to these tails, and I would still be okay buying it as long as it started to lead the charge higher. But I do like that one. LVS was another short. That would have been our short entry point right there. That trade would have made money over the course of the last week. Not gangbuster like BABA, but still pretty nice action. MA, look at that relative strength. Now I will put the SPY overlay back up. There's the market selling off. There's what the stock has done in the last week. It treaded water. That's our edge. That's why we focus on relative strength and relative weakness. If by chance there's a tweet or some political event, something blindsides us on the market, by being in the right stock, we have plenty of time to rethink things, to exit the position, because this stock is leading the market higher. It's leading the charge. So if something happens that's adverse to the market, this stock's going to do really well. We've got time to think about it. Chances are we can exit and scratch the trade. We might even make money on the trade. It happens all the time. But the main thing is we're not going to get pounded. Now, we always try and be on the right side of the market, and that's why I put so much of my time and effort into the market. I spend at least 2 hours every morning doing my market analysis and writing up my daily market comments. So it's critically important that we're on the right side of the action. 75% of all stocks follow the market. So it's market first, market first, market first. I think a lot of novice traders lose sight of that fact, and they just get tunnel vision on a particular stock. So MasterCard, I like it. If the market happens to rebound, this is one that you'll want to take a position in. Roku was another long of ours. Look at this strength. Look what the market did since the video. Down, huge. Look at the stock. I believe, well, this would have been our first entry point Thursday morning. I think that stock rallied about $9. I love Roku. Look at how well it's held up this week. It wants to move higher. So I'm not going to go through and look for any bullish picks. You've got MasterCard and you've got Roku. But we are going to be looking for some bearish picks. So let's go in. We're going to click scanner. We're going to click bearish. Then we're going to click pop bear. I'm going to just look through some of these symbols to see if there's anything there. This move is too big. We missed that train. Left the station. Bye-bye. No interest. Lululemon. I'm going to take the SPY overlay off. Coming in and filling that gap probably has room to the downside, but another huge move. I can't chase that. This is really strong, solid selling. Had earnings after the close yesterday. Stock tanked, so it was a great day trade today. But again, after a move like that, I'm a little gun shy. I want to see things that are breaking down, but that have not been tanking because there's a chance for a big bounce. So I want to catch stocks when they're starting to get through horizontal support like this and starting to drift lower. But a lot of the gains have been already taken right there, so there's not much more downside for us. Now, I'm just scrolling to look for some uh, option liquidity here, and I'm going to avoid the apparel makers because they're all super weak and they all look like that. Here's Guess, another weak one. J&J could be interesting. Another really big drop. Choppy stock through the 100-day moving average and the 200-day moving average. This is a beautiful short on the open. It came up on a bunch of our searches, great for day trading, just continued to fall the whole day. Look at that solid, solid move. Got a little bit of a bounce late in the day, but nasty price action. Too far out of the gate. This is a short that I want you to highlight. This is CAG, Conagra Foods. Typically a very stable stock. You can see how it's been drifting lower. This is not a big mover. This is one you put a position on and you'll just kind of have to wait it out. I believe it's got a very good path down to the 25.50 level where the 100-day moving average is, and the stock's currently at 27.25. These options are pretty cheap because the stock does not move much, but if you look sideways, you can see a little bit of a head and shoulders formation here, and you can see a neckline right there that's been broken. I like that. It's got room. It's got relative weakness. Conagra is one that you can consider for a short position. It's a big list to knock through, and the option liquidity on many, many, many of these is not that good. I'm just looking and I can tell this is a nice sell-off. I like Cree short below that 100-day moving average. That would be a good one. But let's go in and let's use the custom search engine. There's Google. Google runs up, earnings after the close, tanks after that. Not able to find support yet below the 200-day moving average. And now it's taken out that support level today. So it's got downside room. But I don't really like trading super, super expensive stocks like that. But yes, I could make a case for Google being a really nice short that you'd want to take. We're going to click on custom search. We're going to create our own search. And we're going to look for option liquidity. So I'm going to mark option liquidity better than 3 and below 15, which is the max value. And we're going to look for, we're looking for weak stocks. So I'm going to go in and I'm going to look for ADX. ADX measures trend strength. And we're going to use the D1 time frame because we are swing trading. So I want it to be weak on a daily basis. And we're going to click scan and we're going to see what results are returned. And there are a lot. And we can just visually scan. There's some energy stocks in there, a lot of energy. There's retail, there's a bank, a little bit of technology, more technology in here, chemicals, a lot of retail. So those are some of our weaker stocks. Heavy equipment, Caterpillar, Deere. So we're going to, and Apple's in the list as well. We're going to refine this a little bit and we will click to see which stocks had heavy volume today. Let's see what that does for us. Well, that reduces the list pretty dramatically. And we can take a look at these, and I'm going to use a little bit different filter here. I'm going to look for weakness versus the S&P 500. and see what that does. Gives us a little bit different look. Just trying to find what mix is going to give me a nice list to work with. That's a little long, but that might work pretty well. I'm going to look for stock is on a trade signal. It's got heavy volume, or excuse me, it's got the weak ADX, and we'll look for a stock that made a 20-day low. Let's see what that is. That's manageable. This is good. Let's click through this. Let's see what we've got. I could put this list off to the side, but it's actually easier for me if I put it off screen. And let's take a look at what we got here. AAL, below the major moving averages, below horizontal support here, relative weakness. This is a nice short. Tends to be very choppy though. Would hope for a little bit better trend. Look at Apple. This is a beautiful trending stock. This is the kind of stock I like. Apple's a good short. You can see how the stock pulls back. You get this little bounce up to the 200-day moving average. It can't get through. Continues to drift lower, and now it's breached the 100-day moving average. We know it's weak relative to the market because the market is not below the major moving averages. It's below the 100-day, but not below the 200-day. And there, the orange line tells us that it's relatively weak, and the volume is also very high. So Apple and CAG are two shorts that we're going to be considering. Pretty nice compression in here. Breakdown, good follow through, relative weakness, not bad. Not going to make the list. Nice trender. Grind, 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 grind. Peaks, compression. Now it's starting to drift. Every day it's leaking oil and good relative weakness. I would put BB on the list, and I'm going to. It's only an $8 stock, so no need to trade options on it. Stock is an option. And we'll zoom out and see what potential, it's got plenty of downside room, but it's drifting lower. So and to zoom out, I just click the minus magnifying glass, click the blank magnifying glass to get me back to the view I like. Baidu is one that we looked at last week. It is getting pummeled, but it's starting to compress down here, even in a weak market, so I think it's going to start finding some support in there. That would not be my first choice. BK, Bank of New York Mellon, very, very weak. It's probably not be a bad short. You can see a bullish hammer right here. This is a nice short, super, super weak. Again, these all have a negative ADX, so we should be seeing a good, strong downtrend. DXC, oh, it's taking out this low right here. It's challenging it. If it gets below that, it'll continue to drift lower. Don't want to buy it on a major horizontal, or I don't want to short it on a major horizontal support level like that. This is drifting lower. The Gap, another retailer. IBM. Stock is a little bit choppy. Runs up, pull back, run up, pull back, higher, back and forth, okay? But here's one thing that I notice. Head and shoulders. First shoulder, there's the head, there's the second shoulder, and now it's dropping. So this is the neckline right in here, this horizontal support level, right there, and we are below it, and we are likely to fill in this gap right in here. So it would fall from, it closed at 129.48, and it's got room down to 124. It's got plenty of room. So I'm going to put IBM on the list. I like it. I've already got more shorts than I need right now. Don't want to get too aggressive, and I'll explain why. Nordstrom's continuing to melt down. JWN, it's a nice short. MMM, solid downtrend. It's lost so much already. I just don't like getting on board this late in the game, but Man, that is weak. Just going to keep clicking through. Lots of weakness. Should find some horizontal support in here pretty soon. SLB continuing to drift lower. These all have strong trends. That's why I like using the ADX search. It's showing me stocks that have a super, super strong trend. Well, if you'd have caught it and the ADX would have been real negative up in here, look at that move you would have had. And you wouldn't have had to even flinch because it would have just, the momentum so strong, it's just continuing to go down. This is a pretty nice one. This is TJX. This is a retailer as well. And you can see how it just breached the 100-day and 200-day moving average. This might be a nice play. I'm not going to add it, but if you're looking for a retailer, this might not be a bad one. It's not too far out of the gate yet. VLO continuing to sell off. That's on some pretty major support. XOM, another energy stock. And that is a ETF right there. I'm going to bring this back into focus for a minute. I'd mentioned to you, wouldn't it have been nice to catch some of these ADX picks a little bit earlier? So let's move in and we'll go to a H1 time frame instead of a D1 time frame. So on a 1 hour basis, these are showing some very bearish ADX. And we can go through and see what else we've got. I'm just looking through to see if there's anything different on this list. And I see a couple. For instance, I see Honeywell. We'll click on that. That could be a possible buy. This is pretty negative price action in here. I wouldn't short it because this should be support right here. It filled in the gap. I wouldn't be surprised if it continued to move higher, but it needs help from the market. J&J. Nike was one that popped out at me. Nike, you can see, sells off, tries to ride the 100-day, breaks through the 100-day, and now it just plunged right through this 200-day. Nike's a pretty good looking short, but very choppy. And this probably has something to do with the trade war and the cost of Chinese goods more than likely going to go higher, which most of Nike's apparel is made in China. So that will increase its costs and reduce its profit margin. Oracle is pretty nice. Good trending stock. You can see trend, starting to get a little heavy. Got a downward sloping trend line here. It just broke the 100-day moving average. So I'm going to put it on the list. Looks pretty good. SPY is on the list. So now you can see on a H1 basis that we're starting to get SPY on the list also. Now I'm going to run another scan here to see if I pick up anything else using a little bit longer time frame, which is H2. Now I think that you can short the SPY, but I want to take a look at a couple of other indices like QQQ. Here you can see it's just at that 100-day moving average. We'll take a look at the Russell 2000. So this is a better pick in my opinion, and you can see how the index is already below the 100-day, already below the 200-day, never rallied like the S&P 500 did or the QQQ, and it's through this horizontal support level. So I think IWM would be a good pick. And I'm going to take a look at the Dow. I actually like the Dow as a short as well, better than SPY. And here's why. You're through this horizontal support level right here. You're through both of the major moving averages, which the SPY is not yet. This is. So if you want to short an index, and I'm going to put DIA on the list, that's the one to go with. You can see it just below SPY here in terms of relative weakness. Normally they're going to move in tandem with the S&P 500, but here it's just starting to get below it. So you've got your relative weakness as well. We've got our shorts. We found more than we really needed to this week. I wouldn't get super aggressive here because the market's come down. It's tested a major support level. Usually on the first test, buyers are going to view this as an opportunity, especially when that support is tested and it holds. Anyone that was looking to buy back in here and the market's chasing higher and higher thought, I'm not going to chase this, but if we get a pullback, say to the 100-day or 200-day moving average or some other support levels that they've defined, I would be a buyer at lower levels. So you get these first tests of a major moving average, and then you usually are going to get a bounce off of it. When it gets tested a second and third time, that's when you have a chance to really crack down, because at that stage the buyers have said, I already added, I'm not looking to add, and the profit takers, the people who are in risk off mode, see that as an opportunity to unload stock and push it back below those moving averages because they just want to get out. I'm going to scroll back a little bit and let's see if we can find an instance where the market has breached that major support. Well, you can't see it here very well because the major moving averages are not drawn back that far because of the data, but take my word for it, usually the first test of a major moving average, just like this, it gets above the major moving average and it fails. And usually the next attempt or the third attempt will be much better. So let's create our list. I'm going to click lists. I'm going to click create. And I'm going to label this May 29th. And then I'm going to put, now I'm going to add MasterCard. I'm going to add Roku. Just in case the market happens to rebound, those will be our two longs. Now I'm also going to put in our shorts. And then we're going to take a look at our game plan for each one of these. I don't want to just show you a good short. I want to help you put a game plan together so that when we look at these next week, we'll know exactly what we were supposed to have done. I'm going to save and close. Lo and behold, there's our symbol list. So here's our game plan for Apple. Apple, tomorrow the market's going to open. If we get a flat to negative open, you can short the stock right away. We're using this 100-day moving average as our guide. We want to see the relative weakness continue, so we don't want to see the stock rally when the market is down. We want to see it drifting lower and lower. I believe it will. One of the reasons that Apple's been so weak is that right now we have blacklisted Huawei, which is the largest telecom manufacturer in China. If we can't find resolution there, China will retaliate and they will go after one of our tech giants, and that could very well be Apple. So who knows what kind of restrictions they might want to put on Apple, but I believe that's why the stock has been moving lower. Plus, phone sales were generally soft, and Apple is aggressively trying to increase their revenue on services. That is starting to gain traction, but it's nowhere close to replacing iPhone sales. So they're still very dependent on iPhone sales. Just a little color for you on why the stock might be heading lower. And here you can see BlackBerry, another phone manufacturer. And that's also probably a similar story for it. Why I didn't give you a game plan for that. Here we're going to use the open from this bar right here, which is $8 as our stop. So if the stock continues to drift lower, we don't want to give it too much room. We want to make sure that it continues to drift lower. and we're too far away to use that 100-day moving average. So we're going to use that open of $8 right there as our stop. ConAgra, agricultural play. China plans on putting tariffs on agricultural products. Probably one of the reasons that ConAgra is selling off. Here we're going to use this support level right here. Let's call it 28.20, the opening price for ConAgra today. That's our stop out point. We want to see the stock stay below this point right here. And everything that we do market-wise is contingent on the SPY being below 280. I will recap with that at the very end. So market first, always market first. Here we're going to use the 200-day moving average as our stop. That's for DIA. For IBM, we're going to keep this a little bit closer. We'll use this horizontal support level. The close there was 131.42. That's your stop out point right there. So even though it's below the major moving averages, we're going to keep things fairly tight here. I'm a little iffy on this first test of the major moving averages on the market. There's MA, we already looked at that. If the market is above 280 on the SPY, buy it. Just buy it. And we'll use that same principle for Roku, and our stop is going to be the bottom of this red candle right here. As long as MasterCard holds that 248 level, we're good. Excuse me, it's 240, yes, 248. Oracle, we're going to use the 100-day moving average as our stop. That's close enough for us. We can lean on that. And Roku, we will enter this stock if the SPY is above 280. So this stock really, really wants to power higher. We're going to use $87 as our stop on that, which is right there, the tail from yesterday, the low from yesterday, the low from Tuesday. That's our stop out point. And let's put up the SPY one more time so we can get our bearings on that support level, which is 280 right here. That low, that low, that low. Put our crosshair up, pull it across. This one's actually a little bit lower than it, but you can see how 280 lines up very nicely right there. We want the SPY below 280. If it is, we're going to start taking some of those short positions, and we're going to use a closing basis. So the market can go above 280 intraday, but we want it closing below 280. Ideally, it closes below the 200-day moving average and the 100-day moving average. If it can get below this pink line, the 200-day moving average, I think that it's going to really start to gain some traction and fall off. Particularly if the trade rhetoric starts to deteriorate. There's only one number that we have to watch this week, and that will come out Friday. It's China's official PMI. I believe it could be soft. They had a good number in March, and everybody was all booyah, excited about China's uptick in economic activity. They've thrown the kitchen sink at their economy in terms of monetary and fiscal stimulus. The lows are in, everything's beautiful. Well, guess what? April was softer than March, and May was softer than April. Now we're going to be taking another look at their economic data points, and this will be the May PMI. I'm expecting a pretty soft number, and if that happens, then we are going to see the market sell off. And right now, China has basically warned everyone, this is a storm, and we are going to weather it. A U.S.-China trade war is not going to hurt us. We will survive. So they're ready to batten down the hatches. We'll see what happens. I like the short side right now. We just need the SPY below 280. Focus on those picks that I showed you right here. And I think next week I'm going to be highlighting another round of big winners. Thank you, traders. I'll see you then.